All right, today we're going to tackle your trades. I love this segment because it always exposes the mistakes you guys are making. And of course, we'll kick things off with the daily chart first. Take a look here. Kudos to the student. Everything is well documented. The level is excellent, the first entry is good, and the stop loss order was spot on. Just one question. What was the student's take profit target? Because typically on a primary breakout, and this is a primary breakout where the level is clean, the stop loss is placed behind the breakout bar. If you had placed it behind the breakout bar, you would have hit your take profit. Now there was a mistake in the second trade. You messed up by not waiting for a pullback and jumping in right when the price started moving up and down around the level. See how it's just bouncing back and forth here? That's exactly why your second trade got stopped out. If you had just waited for a minor pullback, you would have caught a truly spectacular entry point. So, let's redefine what a secondary entry actually looks like. First of all, there shouldn't be a situation where the price is just moving up and down around the level. Second, no deep pullback. Third, low volatility near the key level. And finally, the asset must still be pointing in its original direction. In other words, you would have caught a second excellent entry point here if you had simply waited, but you rushed it. As for the first entry point, it was also very solid, a breakout point. If you had placed your SL behind the breakout bar, you would have easily pocketed your take profit at a 3-to-1, 4-to-1, or maybe even 5-to-1 reward to risk ratio. Still, the chart presentation looks awesome. The students spent a ton of time documenting everything, so hats off to you. All right, moving on. Okay, here is one of the most common mistakes traders make, and I'll explain exactly what it is. Looking at the chart, everything looks clean and makes sense. But is everything actually good? Not really. If you check the 5-minute chart, the asset dipped into the short zone 1, 2, 3, 4, 5 times and failed to move lower. This tells you the asset simply doesn't want to go down. When you keep trying to short it, but it constantly gets bought back up, it means the asset isn't ready to move. What should you do when this happens? You look at the new level where the false breakout occurred, adjust your lines to draw a new level around it, and trade off of that. Because when an asset crosses into either a short or a long zone multiple times, it's no longer a primary or even a secondary breakout setup in this situation. It's not necessarily a third or fourth attempt either. There's just no way of knowing which try will actually get the asset moving. In this case, you tried to enter on the sixth attempt. Let's count them. 1, 2, 3, 4, 5, 6. You jumped in on the sixth try. This is a common mistake for many traders. Write this down for future reference. If an asset repeatedly crosses from one zone to another without giving you a continuation, then it's highly likely this isn't a short setup at all. You must adjust your level and trade the updated structure. Next up, 5-minute and daily charts. Okay, this level is incredibly heavy. See, I'm not even going to look at the entry point just yet. Let me show you where the mistake lies. First off, if you look closely, the asset went up and down around the level multiple times, so the level isn't valid anymore. To be fair, the initial picture doesn't look like a short setup at all. Second, look at how the price went up and down around this level over here. The asset faces heavy zones on both sides, above and below. That is why when an asset consolidates both above and below a level, a breakout doesn't happen easily, yet the asset staged a deep pullback here. There was really only one mistake here. See how complex everything was? But could you have entered right here? The only mistake was that the asset had already covered way too much distance just to reach this level. If it had paused right here and consolidated for a bit, it would have been much easier to trade. See that? It broke out, but then it immediately needed a pullback. This proves that after an extended, massive directional move that you always have to wait for either a pause or some form of horizontal trend. Only after that did the asset finally move. This setup right here was actually excellent. Yes, the level was there and it was a good one. The move started from this level, though the price kept wandering back and forth. Everything was fine except for one thing. You needed to wait a bit. You had to be a little more patient because after such a massive move, these kinds of levels rarely get broken out on the first attempt. Moving on. Daily chart. Okay, emptiness below. The historical level was formed by an ultra-wide range paranormal bar. All right, this is the hourly chart. If you look closely here, it's the exact same setup we saw earlier. See? Look, the asset breaks out once, nothing happens. It breaks out a second time, still nothing. Fundamentally, the stop loss is placed well and the trade itself isn't bad, but the asset is showing you that every time it dips into the short zone, it isn't bought out. You need to realize one thing. If an asset makes a massive run upward, pulls back, and sellers fail to drag it down, look here. It enters the short zone a few times, but doesn't keep moving down, but breaks back up above the level. It's probably not ready to go short. Always pay close attention to the asset's behavior leading up to the key level. Now, what do we have here? I have absolutely zero complaints about this trade, none at all. A beautiful approach to the level and a close right below it. Everything looks solid.
No issues whatsoever. Look at that magnificent parabolic rounding. It's freaking beautiful. Pardon my French. Pure art. Excellent accumulation here. Typically, assets with this structure spike way harder. This was a primary breakout. The level is pristine, and the trade deserves a straight A+.
And I'm not saying that just because it ended in profit. I'm saying it because the prerequisites here were flawless. Nikolay Dubrovka, brilliant job. Honestly, I haven't seen a parabolic curve this clean in a long time. It's spectacular. Let me show you guys the daily chart. Look at how gorgeous this is. See, we hit the level, pulled back, and closed right below it again. The daily looks incredible, and the accumulation is massive. To be completely honest, I would have expected an even bigger take profit here. You could have let this run much further since it's a primary breakout. The stop loss was placed right behind the breakout bar, making it an absolute A+ trade. There's literally nothing to nitpick with here. Alrighty, moving on. Daily chart, the accumulation is marked perfectly. Very well done. Channel boundary, excellent accumulation. See how on the first try it didn't move and pulled back instead? Everything looks solid. Beautiful execution, super good. No mistakes, no problems here. An excellent trade. Look at this. It's a losing trade, but it was executed beautifully. The asset paused right after a major move. The entry setup is documented very well. Maxim Compass, excellent work here. All you needed to do was wait a bit and look for a re-entry. In other words, your market analysis was completely correct. You just needed to give it a little breathing room to pull back. As far as the trade setup goes, it's beautiful. No complaints? All right, daily chart. Okay, look at this. I don't even need to see the actual trade yet. There's a very heavy zone there. The asset has tried to break into this zone multiple times, and that is your biggest problem. Plus, if you look closely, the asset has already covered a massive distance. You must always pay close attention to two factors. First, how much distance the asset has already covered, and second, how it behaves when it enters a bullish or bearish zone. Look at this. It tried multiple times and failed to move. Then it made another run right here. To be fair, this particular bit wasn't bad. The only real issue is that the daily chart is just too heavy. Forex has been facing a massive roadblock lately. Here's the real trouble we're running into with FX right now. The dollar index is heavily tied to oil prices because we're seeing this wild volatility driven by geopolitical events in Iran and massive swings in crude. Moves have just become incredibly erratic. So what do we have here? These erratic moves are slamming the dollar index back and forth. Naturally, that forces EUR/USD and all the other dollar-denominated pairs to behave poorly. To give you some perspective, over yesterday and the last few days, I have significantly scaled back the number of Forex setups I'm recommending, precisely due to the chaos in the dollar index and the ongoing situation in Iran. Okay, here's the hourly and here's the daily chart. Let's look at the homework. Ticker direction, long trade. Okay, this is completely logical after such a massive drop. The drop was brutal. Just looking at it, it went from 220 down to 160, which is a 30%. Very solid. The stop loss is placed right behind the horizontal trend area. Smart move. This is a beautiful chart. See how the trader waited patiently and made a clean entry? Placing the stop loss behind the horizontal trend area is absolutely stellar. Well done. You could completely expect this asset to make a move like this because the preceding crash was so overextended. Artem Oleinik, fantastic job. Gorgeous chart, beautiful trade execution, awesome entry, and excellent levels. Everything is spot on. Another straight A+. Great work, guys. See how the market was actually falling that day, but he killed it. First of all, the chart presentation looks incredibly clean. Second, everything was done perfectly. And on top of it, this trade was made with Gerchik and Company. Superb. Next up, Vadim Huba. By the way, reminds me of that Hubba Bubba bubble gum. Jokes aside, it's a solid setup, but sadly, it just didn't play out. There's nothing fundamentally wrong with it. Look at the bright side. Some of you might point out that, aside from covering a large distance, the asset had a massive gap. I agree with you there, but there's a but. If you look closely, the asset entered a consolidation phase right after that gap. I recommend setups like these. There was no follow-through move after the close. Vadwim Huba, great job. No complaints here. Remember, guys, not every winning trade is a good trade, and not every losing trade is a bad one. This was an excellent trade with a highly logical, sensible stop loss tucked behind the horizontal trend area. The asset simply didn't move. Everything was done perfectly otherwise. All right, moving right along, here we have the 1 minute, the hourly, and the daily charts. The level is absolute perfection. He's been trading for 2 years already and started at age 14. Outstanding kid. Dambazovic, excellent work. Superb breakout. Keep one thing in mind, any unprovoked spikes out of nowhere, meaning completely unprepared vertical moves. Hold on, let me fire up paint and sketch this out for you. Any spike out of nowhere, for instance, when an asset is just drifting along sideways and then, boom, it suddenly shoots up out of nowhere. Typically, in 90% of cases, when these moves end up turning into shorts. Yes, 90% of the time. This was executed very well. He waited for the asset to start moving, and the stop loss placement is great. Superb. No need to be timid here. You could have easily taken a bigger profit. But seriously, great job. For a 16-year-old kid, that's freakishly awesome. Well done. Moving right along. A mistake number 1. Let me show you. Because the asset has already moved up and down around this level multiple times, you need to adapt your lines. The level should be drawn lower over here. If you had drawn the level further down, say, right around here where the price tested it repeatedly, you would have snatched a perfect entry point. Let me check the chart. Next time, make sure to include an arrow showing exactly where you entered. Okay, I see where you got in. Personally, I would have entered a bit lower. That way, I wouldn't be sweating the trade at all. You needed to move slightly lower because your entry forced you into a very wide stop loss. This is a huge SL, 73.37 and 72.14. That's $1.20. That's a gigantic SL. If you had simply been patient, waited it out, and drawn a slightly different level right here, you would have locked in an excellent trade. Okay, next up, let's see. There is a level on the daily chart, but because the price kept moving up and down around it, it has become unreliable. When this happens, it means the asset has very little energy left. All right, check this one out. Excellent level, fantastic parabolic curve. There was zero reaction to the false breakout. So we trade in the direction of the primary move. It has a huge room to run. Spectacular trade. Gorgeous parabolic rounding. You could have honestly aimed for an even larger take profit target. Beautiful stuff. We have some seriously stunning trades to look at today. Here's a false breakout after an extended move where the asset covered over 30%. A classic return false breakout. Another beautiful setup. We're seeing some truly gorgeous setups today. Isa Paris. Oh, this is 100% Nikita. Nikita, for God's sake, drop Berlin and Barcelona. I don't love Berlin as much as I used to. Excellent entry point. Classic false breakout trade. See, when an asset just spikes out of nowhere like this, trading the false breakout pays off big time. Excellent hourly chart here. A clean 6.5 to 1 take profit. Really cool. Look at how much distance it covered. Super good. On the bright side, the asset made several attempts to enter, pulled back, and retested the level beautifully. That is exactly what you want to see. We got a phenomenal retest right here. See how we only broke it out once on the hourly chart before it moved. Awesome trade, top tier execution. The daily chart looks pristine too. Awesome stuff. Here's the daily, here's the hourly, and this looks like the 5-minute chart. Awesome. It worked out beautifully on the 5-minute chart. Artur, brilliant job.